fire, now it's closing in. Nothing to bear and nothing to win. Nothing to win. Could you believe? Could you believe? Could you believe? Could you believe? Step in the fire, take my hand. I'll take you higher than you've ever been. Than you've ever been.
Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same as best we can with the internet acting wonky the last few days. But let's go into the charts as we go. Bada bing, bada boom, into the charts we go. So we haven't really moved anywhere in the last 3 days. As you can see by these 3 days of candles, we've been staying in this range of the bearish trend-based fib extension level of the 0.786 to the 1 region. Although we have gotten a slight bounce off the impulse of the 618 golden pocket region of the 706, went as low as the 706 and below, 786 I would say. Let's just confirm that to be true. Basic, not quite down to the 786 of that level. So on the Coinbase chart. So this mean reversion path to the upside, if we were to continue, we are beneath the 0.5 equilibrium point of this mean reversion path. If, however, we're going back to test some full mean reversion of whether to remain bullish or bearish, the mean reversion to that would be 19.5. What is this thing that I have on the charts? This is called a pitch fan. You can add it and play around with it at your leisure by going to the fib retracement tools and favoriting it there, and you do 3 clicks and mess around with the angles of the rise and retrace ideas, and it will give you a mean reversion if it continues on that journey. I just have found them fascinating for a few years now, so I like to use them when I can. And it shows good resistance levels for where we bounce off of. I had this back here since this time at January 16th, so it's kind of been holding true thus far. So as we approach, we have a full moon yesterday. It was quite beautiful in Japan, but it should be having that now in America. So let's go into the high block capital heat map. What is the heat map? Well, that's when people lock their liquidity into the charts and let it get burnt to a crisp by the market maker because they don't use a stop loss. And we get to see who those people that got burnt to a crisp are. And it costs a pretty penny, so consider subscribing and hitting that like button so you can get more of this every day. So let's go into the 1 minute time frame here on high block. So this is 6 days of data. It's showing that we are imbalanced by 5 billion to short liquidity. We were talking about this rounded out price action as a trap. They have yet to come back to the pool we've outlined at 27,482. I still think that is on the chopping block because the 100x they rarely leave behind without coming back to reclaim that. So that is still on the chopping block for me at 27,482, and beyond you have 27,768 for another pool of 50x, and 28,313 at the end of the outskirts of this pool. So if we were to rise up out of here and slurp up all these noodles, we would come all the way up to there. All right, so let's expand our vision to the upside and see if the external liquidity pools coincide with the idea of going up. On the 7-day time frame, it does, all the way up to 28k. It has that region. It's the same idea basically as this, going up to that 28,313 region. And if you go to the expanding our vision to the higher time frame of the monthly, we can see how that is. Let's see how the stream health is doing. Hopefully it's doing better. I did maximize my I did about few hours, like 4 hours of troubleshooting. Basically my stream KBBS randomly drops to 0 and the stream disconnects and reconnects. You've probably noticed my stream jittering and stuff. So it was already struggling, and then there was a typhoon, and that kind of caused congestion, and this thing down here was dropping to 0. Sorry to do the aside, but yeah, this was dropping to 0 randomly, and then I was getting dropped frames and it would just disconnect entirely for whatever reason. Now it seems to be stabilized at this number, but it was at 0 up until even last night. I just had to give up and just like try to wait till morning. So seems to be all right now. I moved the portable Wi-Fi device location too, so that could have been a factor. Maybe the clouds of the rain, I have no idea. But I called the company and they said there was no problem on the technical end of things. So either way, so we're back to streaming. Please let me know if the health is cutting out or anything. Hopefully it's getting to you all right. So the monthly time frame has kind of ambiguity to it. It could go either way here on the monthly time frame. You do have double digits down at 24k, but you're starting to get a little bit more thicker bands up here at 29k. Interestingly enough, you have double digits in the starting from $16 billion at 29.3, 15 billion 29.4, 13 billion 29.5, 10 billion 29.6, 15 billion 29.7, 13 billion 29.8. So there's all these billions of dollars up above towards the 30K region, interestingly enough. Now, if we just take this for what it's worth and just look at where price action is and compare where it could go from here, I often do this sometimes where I see, okay, well, if I wanted to go from here, where's the most money? And then I look just above and just below, and currently there's more above, so would we go up higher? There's 4 billion here as opposed to 3 billion down here. So, and then okay, there's 5 billion there. What about down here? Oh, 2 billion. Oh, okay, well then that justifies going up here. And then what about this? 4 billion. What about down here? 900 million. Not even a billion. So okay. And then you start going a little bit higher. 10 billion. What about there? Okay, 6 billion. 7 billion. And then 4.9. Okay, so does it justify the move is what I'm looking for. And on this monthly time frame, it looks like it's justifying a move up to 28K and beyond here. If I start going down into these at 25, it's single digits as opposed to approaching double digits and getting to double digits here on the monthly time frame. So I would say, just off my intuition and doing this over and over again, that there is a slight imbalance to the upside here on the monthly time frame, suggesting a move to the upside at some point soon. However, if we start to shift to the 3-month, this is what we've always been laying out for you as terms of the 150 billion down here at 25.2. So do they make their descent into that region, or is this an untouchable pool for whatever reason? Nothing is untouchable, but is it possible these are company positions or agreed whale positions that they don't touch? I'm novel to, I'll be honest, I'm novel to how this liquidity stuff works during bull runs and things like that. We didn't have this stuff the last time we made a huge ascent to the upside, so I didn't see how much of this they leave behind when they make their surges. We have seen in the past, though, that they do leave behind large pools of money when they make their turnarounds. So there is some sort of structure to the madness that they leave unscathed when they make their turnarounds. Here is a perfect example. They had about $64 billion on the table at 29K, and they decided to just retrace at that point, but there was nothing really to justify that at that time, other than a player probably exiting their position there, a larger player, if you will. And then they eventually created a it's better expressed on the yearly, so we'll go to the yearly real quick. So that yearly time frame was $162 billion at 25.6, and they left that unscathed and just decided to retrace down to 19K real quick, and then they came back for it. So they did come back for it, but they did a roundabout way of doing it. I found that very strange, and I said, they are coming back to this at some point, I guarantee you, and they did. So, and they also left this unscathed at 15.2. They left $100 billion on the table here, and it's now up to $200 billion down at 15.2. Is that their positions, the market maker positions? I have no idea. So these kind of novel concepts of why they leave certain pools unscathed is a new concept to me. So are they going to go down into that 25.2 region? We've been having this outlined for you for quite some time now. Are they going to come down and get these guys, these consolidated longs, before they peel out? So if we go back to the 6-month time frame, you can see that the pools are thick down to the 22.5 region, $100 billion down there, and the entire path caked up quite nicely. So the imbalance is to the downside on the 3 and 6 month time frame. However, when you shift to the yearly, it starts to become ambiguous again. So you have an ambiguous yearly and 1 month slightly pointing to upside pools versus the 3 and 6 month downside projection. So which one is the path we're going to be on? It looks like the pools are building quite nicely to 32.4 and beyond. So if we are going to make a surge at some point, the liquidity does warrant a 34 up to 34k bounce. Beyond 34k, I wouldn't say there's much there, but you probably entice more as you start to short squeeze up, if we were short squeezing up. So right now I'm personally more bullish than bearish, even though we do have those pools below, because we've had more than ample opportunity to get them. So if we do get them, I'm happy to ride that out as well, but that's just my personal feeling on that. So if we come down to here, snag these guys, it's more opportunity to potentially take it to the upside here. Let's go into the Binance chart and take a look at the oscillators. The Discord trading sessions of the last 3 days were fired. Oh, nice. Yeah, the Discord NASDAQ stuff is pretty fun. And Peyton's doing a great job with that as well. Shout out to Peyton. All right, so on the bullish trend-based fib level, we have not reclaimed the 236, so we are not bullish yet until we can reclaim 27,213. If we can do that, let's turn on our oscillators and see what's up with that. Boop. There we go. So what is this? This is momentummaster.info. Link in the description for more. Scroll down to features, toggle everything at your leisure using the toggle switch, or looking at each individual component as we go through. So still holding the cross up baseline of the daily idea of bouncing to the upside here. We've been maintaining the thin boy for some time. We have failed the thin boy baseline, and we still have the fat boy backup baseline here as our level to watch. It would be coinciding with this 618 idea. If we break down here, then maybe we're heading down to those pools on the daily time frame. So the one thing I realized the other day was the 5-day and the weekly coincide with the weekly candle close. The weekly candle close and the 5-day candle are coinciding here. We have reset the stochastic RSI on the 5-day time frame. The Williams is potentially staving off something, but could break down here to 50, realistically speaking. We have crossed down and had that alarming event with the cross down back from April 16th. At some stage, you could reset some of this Williams some more. If we're still bullish, this will get pinned up here on the 5-day, and you'll start to see this curvature. You're already starting to see it on the stochastic RSI, and the money flow is coming back in on the 5-day time frame. If we look for some, that is also kind of, wait a minute, let's look for the weekly time frame here. Okay, so you have the weekly time frame closing in 2 days, or a day rather, and you have the money flow beneath the RSI with a little bit of curvature here on the weekly, suggesting you could get a play here. What is the value here for the weekly? It is 28. Do we see some bounces at 28? Sometimes you do get some in this random manner at these levels here. Here's one in September 21st, 2020. We got a bounce at the 20 level of that weekly time frame, and that was the kickoff beyond that adaptive moving average here. Interesting. So you do get punts above that level on the weekly, so it doesn't need to reset completely always on the weekly. You are getting the alarming event on the Williams, which is something to note. When you get those in a fashion, that could be a reset potential of a weekly time frame that gets suppressed in a manner like so. So that is something to take note of. Similarly, when we were overbought back here on the Williams, we did come down too. So when you get overbought on the Williams in conjunction with the stochastic RSI, that is something to note. However, normally it lets you know what's going on in a manner as the stochastic is resetting. The stochastic has reset without giving back much of the price action, suggesting you could have one of these triple top scenarios similar to here, where we curved, and ironically we curved around the same level at the 20ish level, and this was overbought and dumping, and we curved back up for that double top. So are we going to see something in a similar way where we curve at a random point in the stochastic RSI and the Williams here? Something to think about on the weekly time frame. The cloud is still thick on the volume weighted moving average cloud, so it suggests there is positions of buying volume still maintaining here, and this is an accumulation of buying and selling, but the fact that we are maintaining this level is quite interesting, that we have not given back as much over the past 4 or 5 weeks. Okay, so making our descent through the time frames to look at oscillators to get some momentum gauge on momentum here. The 3-day is suggestive of reclaiming the thin boy baseline. This is the start of a narrative of a cross-up event. This is what you like to see on all time frames in terms of a fractal idea of scooping up the price action and curving up in this manner. So are we going to see this kind of cross-up idea on the 3-day time frame unfold over the next 6 to 9 days? That could be the idea here on the 3-day. We were currently staving off this April 16th cross down event that we had on the 5-day as well. So we were pointing that out to you as we were seeing the resistance levels. And if we go to, let me see what the B oscillator was looking like. We skipped that. Starting to see this play out on the 3-day time frames, looking like a little bit of the curvatures staving off for the last 3 to 5 days, but the money flow is beneath the RSI, suggesting that you get a bounce up here in a certain fashion up to these levels perhaps. Just interesting to note, you do have the Williams oversold on the 3-day time frame. If we go to the daily time frame, this is where you'll see the ambiguity as we reach the 50 level here. Are we going to bounce off of 50? It has happened before and it will happen again. Do you bounce off of 50? 50 is a level to note. On the way down, generally you come straight down, but there are times in the past where you do come to 50 and bounce, 50 and bounce, 50 and bounce, 50 and bounce, 50 and bounce. You see these often on the 50 level for a lot of things with the RSI and the money flow. The 50 level is even Steven right now, suggesting it could go either way. Ambiguousness. If we go into the B oscillator, the MACD has yet to cross down. If you do have a Momentum Master subscription, please consider adding an alert to the daily time frame on a cross up or cross down of the MACD. If this cross down event occurs, maybe you will see the downside event to this pool, and it will be a leading moving average formula when you get this to cross up as it did. Let's see, when did it cross up here? It crossed up here on Saturday, May 20th, and that was before your move to the upside. So when they cross up, it preempts a move up, and if it crosses down, it preempts a move potentially down. So we have yet to cross down on the MACD, so that's something to note. So we're still in that zone, but it is on the precipice, so if this could be something to alert yourself to on the daily time frame. So it is specific on the time frame you're in, so you add this alert on the time frame you're in for the normalized MACD. This is one of the few formulas that's a leading formula for the MACD. It was extremely difficult to make. All right, so 22-hour time frame curving down here and showing that you could possibly come down some more, ambiguously trying to hold 20 for whatever reason. The last time we were at that region, we did see a bounce after a stop loss hunt. So are we going to see that again? Money flow is beneath the RSI. If it gets below in all the time frames, it tends to get bought back up. So are we going to see that on the 22-hour time frame? Let's go look at the cloud health. We were talking about this curvature, which we did get in terms of a preemptive move to the upside, but it is finished now, and we are starting. We did lay out for you yesterday that this kind of curvature was looking like it was preempting a downward path, which it is starting to do. So we're meeting with resistance off of this shift in the cloud. Are we going to see this resistance and come back down to here? We need to reclaim these levels if you are going to see an upwards projected path. I still am not sold that we are going down until we get at least this pool of 100x characters that we outlined for you over the last 3 days. These characters should be right for the picking at any point. So coming up to that region, I mark it off on my charts, and that's where I see them come back to more often than not. So I put my confidence in that. If we can reclaim this cloud, we'll most likely come up from there. We did have a cross down event which we're trying to contend with on this time frame. I don't put much stock in on the 22 for that. I use the 22-hour time frame mainly for the resets in these oscillators and trying to get these points here where they're low, where the other time frames are high, and this unsyncopated rhythm of the 22 catches you that nice juicy bottom. Okay, so if we go into the 12-hour time frame, 12-hour also meandering around with the idea of coming down further. Williams also at that ambiguous point. Money flow beneath the RSI suggesting that you get a bounce off the money flow. And let's go into the 6-hour time frame. 6-hour time frame got overbought without really going anywhere. We kind of went up, I guess, but we've given back about half of that move. So I think we can delete this fib level actually, because it has already served its purpose more than once. Most likely if you go down from that fib level, you're going to break it. So we're going to try to remove this really quick. Actually, we'll leave it up for now. So the 6-hour time frame, the cloud, you're meeting with a bearish retest potential kiss on this cloud. The angle is changing ever so slightly. You're losing a little bit of that momentum to the upside. If you cannot get above this 236 level, it's the same thing reiterated. If you cannot get above 27,213, then we are basically on a path to the downside. It looks like right now there's this W formation attempting to form, and you could call it like a ABC, whatever you want to call it. Like, are we trying to do an extended W out of here? Rarely do you just go straight up and make a V shape. It's always a double bottom of some nature. So this looks like a V shape, but actually you have your double bottom. So it's just Wendy's and McDonald's for days. Wendy's to the upside and McDonald's to the downside. So looking for those double bottoms is where it's at. So looking for that range double bottom idea. So for this range idea would put you down in these golden pocket again, or if you come down here for the triple bottom. Okay, so the 6-hour is flirting with the idea of crossing up, though. This is something we were just about to overlook. You're getting the baselines in a tight pattern here. If we can get above it, then they will potentially cross up. The one bad point of it is that it is over the price action, not under the price action. Now, if the candle was up here and they were about to cross, I would be a little bit more bullish in that idea. But right now it looks like it's trying to continue this suppression of the cross down event and this rounded out idea to come down some more with the ABC to the downside. You're starting to get some ambiguity on whether it wants to continue here and maybe wants to retest 50 and come back up. I don't know. And if we go to the 4-hour time frame, 4 hours starting to come down here after getting previously overbought. We had one interesting thing to note is that we did not give back so much in that reset of 50 points from 95 down to 50. We nearly went sideways. We kind of went down by 1%, but that's relatively great considering if you give back a lot. The leading MACD has crossed down on the 4-hour time frame, so this could reset in full now, and the Williams could just hang out here at the 50 level on the 4-hour time frame. So you're at a kind of range bound trading scenario right now. You did get the cross up event on the 4-hour, but we're currently failing the fat boy, the last ray of hope for the 4-hour idea. This could become a buyback wick as it did on this candle, which did reclaim that. So unless you can close a 4-hour candle above the baseline, this could be setting it up for a cross down event to go further down. All right, and let's go into the hourly time frame. Hourly time frame previously got bearish divergence here on the money flow, and then that's where we started to see our descent down after that hit to the high. This was your 1, 2, 3 hits to the high idea. If you were looking for a short, you had 1, 2, 3 hits to the high, and the power of threes reversed you. May the power of threes reverse you. And they started to head back down from there. Also, you had the cross down event and the rejection of the adaptive moving average. This was around midnight my time. I was getting some rest in preparation for the week ahead. So this was a rejection, an attempt to reclaim and rejection of the adaptive weighted moving averages here, and you got the cross down event to the downside. So unless you can reclaim these baselines and cross them back up, you could see yourself all the way down back to the bottom of this channel. And the hourly is getting reset and trying to make a play here, but not yet bullish, and we broke the super trend idea, so the bearish reset is on for the hourly time frame. Also looking at the 15, we're going to try to go to update if the stream will let us. Let me see how the stream health's doing. Ooh, still good, still good. If the stream will let us, we'll try to do another update to make up for the delays in New York session. So we're starting to see a cross-up event scalp on the 15. This is how the time frames juxtapose, because you have scalps trying to play out on lower time frames while the higher time frames try to suppress you, and then you see that that suppression is in effect basically by the cloud behavior on those lower time frames. So right now we're seeing a thick purple cloud of sell-off volume on the 15-minute to contend with here, and so the reclamation idea, I would expect you come down, make a double bottom if you're going to come out, and then this would have to round out a little bit more and come down, and then you'd probably create some sort of double bottom event, and then if you're going to pierce up about out of it, then you'd get out like that, and then this would kind of come around like this. Okay, so if you were going to come down, you'd create a double bottom, and this is the dragon idea, and also it happens to be this schematic. You see this double bottom, come out, make a little dragon head, and then you're gone. And so this is the shoulder, head, and shoulder idea out of here. This is Bitcoin's local bottom, and before we knew it was not even the local bottom. This is the 15K bottom. See the long price 1613 up here. So this was your exact bottom of Bitcoin before we knew it was the bottom, because this is the structure you look for. This structure, this schematic on the website is the schematic of schematics. You find these double bottom plays out. It's basically comes out, retests, and you're gone. So this is your double bottom play, and you could get the entry there, you could get the entry there. There's two potentials. This one's more risky than that one, but they're both ideas to note. Okay, and you just factor out all of the other noise and just take it for what it's worth if that's what you're looking for on the 15-minute. But you looking to the left doesn't hurt you to try to find out where some liquidity pools are, and that's where you start to expand to higher time frames and see where your narrative structure sits. Is this a double bottom too? If so, is a shallow one where I want it to be at? And then you could pull some fibs and see, is that a pocket? Well, it brings me all the way down to here. So is that really the play to take this double bottom, or to wait here? And at some point you just have to pull the trigger and see whether your theories are correct or not. So if you look at the 4-hour time frame, the double bottom event is potentially here, and we were talking about this being an ABC to the downside, coming down to this range, and then that would have shoulder, head, and shoulder vibes attempting to come into this pool. So this is why we look at it and juxtapose with liquidity, because the liquidity doesn't lie and give you just speculation until you have some narrative with the liquidity. Right now, in the last few hours, they've pinged in more shorts than longs, as you see here, 83 million, 79 million, as opposed to 32 and 47. So there's less longs being enticed into the charts than shorts. So you could get some surge up to this pool at 27,458, the 100x pool up there. So I think that is highly likely still, despite us going sideways over the last 2 days. I suspect by the weekly candle close we'll be at least wicking up to here at some stage. Okay, so the 15-minute hourly reset is in order. How does it bring you down? You have the cross-up event. You try to see if it holds the baselines here, the pools that it's coming to attack, possibly 2686. That 50x pool, 2686 would be, yeah, it would bring you down to this 618 bounce idea again. Somewhere there. So are you going to go down to the 618 and bounce out of there? Looks like you're coming down to reset the 15-minute right now. The money flow is above the RSI here, getting a cross down on the MACD and the Williams. Trying to cup and handle your way out on that Williams, but not meeting. The thick cloud is where you find the idea premature, basically. If you're starting to get it thin in this manner, and you pierce out, see this double bottom out of there, it was kind of thinner than it is here. This is a very thick cloud on the 15-minute. I wouldn't mess with the long just yet. You try to see if this kind of plays out to this region. So coming down into this 50x 92 million pool. They are currently underwater, by the way. They opened up their, let's just zoom in to take out the minutia out of here. So this 92 million opened up here at 27.3. So they opened up into resistance, and now they are currently being targeted for that attack down to this region. Do they spawn some divergence off their corpse and take it back up to the pool we talked about? That could be the play. So we'll be looking at that 618 bounce again here on 26.8586 region. So that's basically my story, and I'm sticking to it for now. I hope you guys are having a great weekend. It was high air pressure due to the typhoon, but the air has gotten fresh. I will go out to the park with my kids now since the rain has stopped. So that's it for today. I'll keep you updated in the group and also by New York session. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in, and we'll do the same, and we'll catch you on